All right, welcome back to Beyond the Cards, your podcast with the payment nerds, where we talk about the payments news you most want to hear. So, welcome back, guys. We have kind of a special episode today. It's just us Americans today, but as fitting as we are going to discuss some regulatory issues here within the U.S., like specifically, and I know we alluded to it, but we want to talk about the Consumer Financial Protection Bureau. There's a lot going on with it, and I don't think people really understand or realize how big of an impact these rules have on the payments industry.
No, yeah, these rules are actually taking over and they're affecting not only the financial institutions, but they could possibly affecting the consumers as well. So it's going to be affecting everyone. So this is not just for our payment gurus, our payment folks. These are for everyone, even as us as consumers. So these rules apply to everyone at this point.
Yeah, and why we really wanted to focus on this episode and why we're doing this special episode is there's been a significant amount of whiplash between the priorities of the bureau, which have now changed. Um, there's a lot less people working at this CFPB as well, and within the context of some of these rules, there's just some pretty big ones that are going to impact our industry. So, I think the at least the 3 biggest rules that are currently being rolled back and will impact our industry is there's been changes to the open banking rules, or like section 1033, some buy now, pay later regulations, and then also over the digital payment app oversight. And then I also think that there's like some compounding rule changes where they're like not specifically on the pulse of payments, but are adjacent. And that would be earned wage access, EWA, um, overdraft, and credit card late fee caps. Does everyone kind of agree with my assessment?
Yes, agree with you on those items. And the top 3 you mentioned, the BNPL, open banking, and then it seems like there's some that might be in a way kind of not necessarily falling by the wayside, but people just start there are so many rolling out right now that I think there's a few that I was just looking over that I didn't even realize were out there. So, definitely good to mention all of those.
Yeah, I mean, we all lived through Durban, right? And I think like we can recall when Durban rolled out, like what did the banks like first start to try to do when they had their debit card fee revenue cut was they wanted to add more fees. And like that's where I can kind of see how some of these compounding factors kind of balance into some of these rule changes. Um but also like especially with the digital payment app oversight, I could see overdraft and credit card fee caps being like very closely tied to, maybe some more predatory apps, where, it's not specifically disclosed. But I'm getting ahead of myself.
It is okay. It's a big topic. It is how is it going to impact globally in the US? What does it look like? Where's the confusion? Where's the clarity? It's a lot of things and a lot of questions that I think not just only we, but even everyone should have going forward, especially now because it's changing by the day.
Yeah, so maybe let's start off with the open banking rule. And this is one that's kind of, I think, confusing for a lot of people, because they might not really fully understand what this rule was trying to accomplish. So originally, and this is where, like, in Europe, right, there's pretty extensive open banking. And what that means is that the banks are required to essentially open their APIs to third parties and make that information available. So that way you can have these really neat, you know, payment apps or, you know, apps that help you manage your money, or, potentially make payments through those apps. And in the US, right, we do not have true open banking. Every kind of payment app today, where let's say, like I think like a Trustly is one, iLink, Remitly, these apps, they have functionality because they've individually worked with each bank, either signed an agreement or gone through a specific integration and had to go through this kind of process one by one. And the rule essentially was to make our environment look more like Europe, where the big banks would have to open up their APIs and allow, both consumers and third parties start to access that information to be able to create new products and services. That's gone now. And one, I think it's just stifles payment options, but two, like, one of the biggest challenges in creating new payment products is are they easy to create? How much money are you spending on building it? And what are their ubiquity, right? And so what I see this rule change really impacting is it's going to limit disruption in the industry. And what I mean by disruption is it's going to be hard for any like new participant to come in and challenge established companies without a significant amount of capital behind them.
Yeah, you're you're thinking and just meaning towards any of these vendors that are already basically set up. It's going to be so much more difficult for the new competition to come in because now there's no it really limits their ability.
Yeah, absolutely. It would be like, should we start a new credit card network?
Mhm.
Like how you'd have to go out, one, build the network, two, get issuers on board, and then start issuing cards and make sure merchants can, accept and process those payments. So like you'd have to overcome this huge barrier. And this rule essentially was, okay, we want innovation. We want companies to come in and, address certain problems in the market. And without, that without that rule, it just becomes a lot harder.
Mhm. And also, there's no longer any requirements for well, because there's no requirement for the open banking, it really eliminates anything they have to do that would standardize and make it easier for these third party and new companies to access that data.
But they're also trying to limit the big banks, they're trying to limit the competition that's already out there.
Mhm.
So it's like
Yeah,
it kinda works in their favor, like it's a handout to them, um, which this article kind of says, but it is really limiting the competition.
yeah, it's definitely a stifling of competition. And, at least from, some of the reporting that I've seen specifically is, a lot of these larger banks are saying that because they obviously, as you guys just mentioned, they did not want the rule change. Um, well, they did not want to comply with the rule, and a major reason why they said this was that they were concerned about security. like, "Oh, we can't open this up because then everybody's information is out there." And I don't know if anyone else feels like this, but I swear I see news about a data breach like every other day. I think like Forbes puts a lot of these out where it's like 2.4 million accounts compromised. And I'm like, okay, like at, at what point has every person existing on the planet's account been compromised because these numbers are just too significant? Not saying that that's good, but I'm just like, is all of our information already out there? Like, I mean, as long as it's, and of course, this information is not like you're required to share login credentials, etc. You know, but if you think about any change to, and here's like another, tinfoil hat, potential theory as to why larger banks would not want to have this open banking system is that leaves the door open for a disruptor to better create pay by bank payment methods, which would mean if we all have easy access to pay by bank and can pay, using RTP or FedNow, well, now there's no incentive for debit cards or credit cards because, you know, you're not going to have that interchange revenue coming in. And I know we just like wrote an article about open banking, and it is a very hot topic, and it's tied to pay by bank, and it's just one of those systems where it's like I just do not see pay by bank becoming a highly ubiquitous, highly used
Yeah,
payment
the
method.
utilization.
Yeah, without a true open banking rule and any type of change to the rewards card system. I mean, maybe there could be like applications where it starts cutting over, like maybe and I remember back in the day, because I'm old, uh when, like when contactless payments was the new thing. So like tapping a card or tapping your phone. And I'm a stats guy, I'm a numbers guy, and I remember they like UK transport started to have contactless payments, and surprise surprise, like the next year they were like, "Oh wow, surge in contactless payment numbers." And it's like, "Well, yeah, because in transportation you're tapping for a metro fare, and you're probably going to do that multiple times per day." So I could see maybe like toll road systems, ferries, other types of like public transport systems, you know, could be a really good application of pay by bank. But like if you're going to go to the store and put $250 on groceries because you bought 1 dozen of eggs, you know, you're putting that on a credit card and you're trying to get your 4% cash back.
Exactly. So this is going to be very, very hard for those merchants and for those processors and acquirers that are going to be trying to push pay by bank and the ACH payments and all of that. Is at the end of the day, it's bad for innovation. It's bad for the growth. It's going to hinder our financial systems. The growth
Yeah,
of it.
totally. It's totally bad. And like it's weird because I feel like that's antithetical to like what the US is like kind of good at, right? Like we're good at tech innovation. We're good at creating these new products and services. Um and I feel like that's just really making it difficult for people to innovate because again, you're just going to have to go out and get a whole bunch of venture capital behind you. And, I I can go on about how I think venture capital is a Ponzi scheme, but I won't. But it 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 just makes it a lot harder. 'Cause that gal, what was her one app name? It was like a man's name. It wasn't Dave, but and I wanna say it was like Travis, but I think her name was like Charlie Javis. I'm probably getting her name wrong. I'm ruining everything, but remember she had that, like, student loan management app, and she, like, lied about how many users it had, and then JP Morgan bought it, and they were like, this was fake." She's going to jail now.
Well, there's been a few of those.
Yeah, but that's just, like,
Yeah.
this this could be an implication, right? Like, you
Right.
stifle innovation, you put a lot of need behind venture capital, people are going to get aggressive about trying to raise that capital, and then it just opens the potential risk of, like, bad actors who are just trying to quickly build something up, get a whole bunch of venture capital, and, we chances are if they're on a Forbes 30 under 30 list, like, it might be fraud. They're known for that. Alright, so let's talk about the buy now, pay later regulations, because buy now, pay later is having a moment, and I would say not, like, a great moment.
I mean,
So
I was about to say, but they're growing though. Is there so many buy now pioneers are just popping up out the blue. So it's like, how are they going to scale back from that when there's so many are coming to the forefront?
Well, I
well, I
don't know
know
if they're all just making money off of every single transaction though, because it looks like there's some of them are seeing some bad behavior.
yeah, Chelsea and I were just talking about this the other day, where we're like, "Did you see the losses posted? Like, yikesies."
Oh, Clarnia is losing a lot. I saw that the other day.
Yeah.
I
Like,
love that you call it Clarnia, like it's some sort of, like, magical land.
Hey, I can screw up the
sounds like
name
it should be in the
sometimes.
Narnia cabinet.
Um, but yeah, the CFPB was basically trying to bring buy now, pay later under the Truth in Lending Act, which would require a lot more disclosures and oversight. So, starting to report to credit agencies and having certain consumer protections in place, similar to how you would have credit card protections. And, well, that's scrapped. Now, there is voluntary compliance, right? So I think we've talked about how a firm has decided to voluntarily comply with providing data to reporting agencies. And I think that is mostly because a firm isn't only paying for, but like when we're talking about really who this is about, it's the people who are focusing on the paying for. And it's dangerous.
Very dangerous.
Yeah, because I mean, as one, the R word, the recession could potentially happen, right? One of the, hallmarks of that is increased credit spending and then increased default on credit spending. And it's kind of a runaway train because if you think about it, right? Like, how are buy now, pay later companies going, like, how are they going to recoup for those costs of losses, right? Is, they're just going to increase the fee for
The
offering
rates.
it. Yep. And unfortunately, once kind of like the cat's out of the bag, people are going to want buy now, pay later, no matter what. And so merchants are going to have to offer it, even if, the acquisition fees go from, something competitive to 4, 5, 6, 7% acquisition cost. You know, for a merchant, it's probably worth the risk because that risk is being outsourced, but dang, that gonna be expensive.
I see a statistic that Klarna in 2024, the spend per user was $513. I feel like that's pretty high because to get to that average, I mean, at what point wouldn't you just be putting it on your, I guess, what, regular credit card?
I
I
mean,
don't know. I don't
full
use it very
disclosure.
I've actually never
Oh,
used it. I'm horrible.
yeah, I do, and I can tell you right now,
Do you go that high?
I definitely hit 500.
Okay.
So I buy a lot of running shoes and running stuff, and, I'm dropping, like, you know, shoes are expensive,
Oh, yeah. Especially
getting more
those.
expensive too. Yeah, so I'm usually, like, a pair of shoes is minimum 150, don't judge me. And I'm like, I don't know, I'm gonna buy a pair of shorts or something too. So now I'm up to 200, and because expedited shipping can be put into the basket and get covered by buy now pay later. I want that stuff in like a day because I'm problematic. Um, and so like I'm checking out using buy now pay later, and I'm usually paying 250, 300.
Mhm.
And I'm gonna do that at least twice per year. So I'm definitely up in that 500, 600
Okay.
territory.
I've done it too. I don't do it quite often because at the end of the day, it's like a credit card bill, right? You pay it every month or you pay it every 2 weeks, however, whatever they tell you um, your pay schedule is. But it, I think it's a crutch for a lot of people too. But then it kind of raises the question like, how many of these are fraud? Because a lot of these buy now pay later just do not vet them like a firm does, right? You can just put in your information and boom, you have the money. And that's why they're losing a lot of money too, because some people are just using it as a one-time thing. And when I seen the stats of losses between last year and just the first quarter of this year, it doubled for at least one particular one buy now pay later. And a lot of these people that use it, some don't have credit cards either. So it everyone is resulting to using buy now pay later for everything. Food, clothes, travel, anything you can think of now, you can buy now, pay later. You'd even have a buy now, travel now, pay later type thing, which is the same thing. But they have to find a better solution for this to keep it under wraps.
Yeah, and this is where I feel like there's that tie-in with that overdraft fee, which would have capped the overdraft fee. If you have your debit card linked to your buy now pay later account and you are now overdrafting because your buy now pay later, couldn't process. So you can obviously see that, having that fee capped protects people to some extent from their own worst habits, and prevents them from basically spiraling. And I don't want to get into a conversation about like, well, maybe they should, like, because I don't believe in policing the poor, or socioeconomically disadvantaged. I don't think that's a great thing. But you can see how these things easily get linked of, okay, well, you don't have the money to afford something, so you use buy now pay later, then you start overdrafting your account, and
Yeah,
if there's no cap on those fees, how do you get your head back above the water? You just
exactly.
don't.
Jasmine and I were talking about this before because we were discussing how it's such a slippery slope on bank OD fees. I think everyone can probably remember a time when it's like all of a sudden you had 2 things go through before the deposit, and there was 2 $22 fees, and then your deposit was actually only enough to cover the transactions, and you get a third fee, then you start getting one every day.
Well, like, wasn't there also a thing back in the day, and I feel like wasn't it especially, like, in those situations, right? Because I know this had happened to me, and I feel like I distinctly remember this rule change.
Mhm.
You have those purchases, and then you would have a deposit in that day, and you'd be like, "Oh, I'm covered." Like, it's
Yeah.
NBD. But the deposit would actually process
After.
last?
Yes.
Yeah,
No, you're completely right.
and so then you would still end up not being able to cover everything because the deposit wasn't processed first, and then you would start overdrafting, and, this is where, the CFPB really comes into play and protecting people because, you know, you can think about a payment app. I'm not about to transition into payment apps here, right? Like, you can easily see how a payment app could lure, somebody in and being like, "Oh, $150 of overdraft protection." And you think, "Oh, that's great," but you're just gonna get killed on fees when really, like, the best overdraft protection, in my opinion, is the transaction just simply declines.
You just don't get it correct. But I guess if someone actually still writes a paper check.
Well, yeah, you have that. And then I think a lot of these banks, when they took away, they put in place these overdraft protections. For instance, I was just talking to Chelsea about this. Like, let's say Truist, depending on your longevity with them, I think they will cap you at $200. Once you're at two, you can't do anything else. Capital One does 100, but one of the problem is those pending authorizations that are still there, and some banks do not disclose those pending transactions that you currently have, and then you think you have more than you do, and then you end up going over what they tell you you can and cannot go over. It's still a thin line a little bit, but I just feel like
Yeah,
see,
I think this is a good transition into talking about the digital payment app oversight, which, there was a rule coming out saying that, these, financial services apps needed to be doing more to protect data, reduce fraud, and, like, curb illegal quote unquote debanking. This is one that's, like, really interesting because there this is one where the big banks are like, "No, no, like, we should actually keep this rule because, 1, these payment apps are competitors to them." Um, but of course, the tech innovation is like, "No, no, we should scrap the rule." So I think it's, like, if currently facing repeal, and there's, like, obviously there was always gaps in the oversight even from the existing rule, but I think this is, like, probably one of the also more, like, pernicious rollbacks is digital payment apps can be very, very tricky. Like, I we've talked about the whole Evolve Bank Yada payment app extensively, and I think this is like that is the epitome of this discussion, which is you think these bank apps or these payment apps, these fintech apps, they're banks, and they're actually not banks.
They're not banks. Correct. Well, and if
And
they're not having any supervision, who's watching it?
no one.
Exactly.
I was about to say
It's
they're not even backed up by real banks, really. So
Well, I mean,
say that. I'm not saying that wholeheartedly. You know what I
well,
mean?
I think you're right to the extent that a lot of those fintechy apps use when they have a relationship with a bank, and again, because there's no open banking, it's all through these weird, you know, integrations that are one by one, etc. But a lot of those use FBO accounts for benefit of, and you can't really extend FDIC protection to an FBO because you don't know within that FBO account, like what money belongs to Jasmine, what money belongs to Chelsea, what money belongs to Dan. It's just all pooled, and the ledger is unclear. And it's very clear that at least in some of the reporting that I've seen is that a lot of these payment apps, etc., they really like to look like banks.
Yeah, I think, and the regular consumer just assumes that they have the protections like they would with a bank. I mean, I certainly don't really have any money in my Venmo account, right? Or something of that nature, but I don't
I
know
do.
if people understand that in some of those apps, unless they are directly partnered with an FDIC bank, right? There's not the same coverages. And that's just one piece of what's not being covered or, you know, held to a certain accountability.
And I think that was
Mhm.
a problem previously when people would lose their money. It's really like, well, where is my money? It was held here. And I'm like, well, I don't know. We don't even
Mhm.
have any record of all your records of this is Chelsea's bank money, this is Stan's bank money, this is Jasmine's money. It was just everyone in one pool, like you said, Dan. So it's like, where's the insurance? That's the question.
Yeah, especially with the payment apps, right? The level of fraud and fraud protections are so minimal, and the the teams there within those companies are just not that significant. Combating fraud is extremely expensive, and there's just not a lot of people around within those companies to make sure that their security algorithms are up to snuff, that they're being, able to detect bad actors and remove them from their platforms. Um, and also just, like I'm bad. I definitely still have a Venmo balance. I know I'm supposed to move it because, I'm just enriching that company by letting them hold money and probably earn interest off of it, but I don't earn any interest off of that money sitting in Venmo. It's a lot to keep track of too, because these, you know, at least my news algorithms are like, "Did you want to learn more about this?" So I know I'm getting bombarded with it, but I feel like there's so many, like, quiet changes being made that don't really get as big of headlines, and, obviously there's other things happening that don't quite reach the level of breaking through, that we think that these stories should break through, but, there's a lot of, scary things coming through, and at least in our case, right, like, it makes it really hard for merchants to make decisions, right? Like, if you don't know what's going to be happening with buy now, pay later, right? Do you make a decision and add one of those providers in? Um,
Mhm.
if these rule changes get rolled back, does it have interchange implications? I would imagine, right? Like you would levy for higher interchange if there was fee caps, but if there's not and fees still keep going up on interchange, it's like, okay, but why are these fees going up? So I don't know. It has a lot of tie-in. Nothing ever exists in a vacuum in our world.
More to come. We shall see.
Yeah, I mean that's why I feel like doing this little episode was important is just a recap of maybe calling some attention to what's happening. And I think, like, industry likes certainty, and things continuing to whiplash it's just not good. And like, it's gonna be hard to say within, in 2028, are we gonna have a whiplash potentially back to the old rules that then seek a lot of enforcement? And, time will tell just how unruly things got when you put enforcement back in place. All right. Well, I mean, that's all she wrote for me.
Very
That's all
informative session.
Yes, very one. Like I said, it's just more to come, and I'm curious to see what's going to happen with some of these fintechs and some of these acquirers that have already started to kind of build out some of these innovations, since now they're scaling back. So what is it going to look like moving forward in the payment industry? And this year, next year, it's kind of scary to see, but I'm interested to see what's coming down the pipeline.
More fees.
Well, we can definitely contest to more fees.
More higher costs. I mean, that's I think what's eventually coming down the line, but we'll see. Sometimes I'm wrong. All right. Well, thanks for joining us in this little bonus session, and we will see you on the next one. Remember to like and subscribe, share. We would appreciate it. It's free, helps us out a lot. And we'll see you guys next time.
We'll see you
Bye.
guys next time.
Bye.
Bye.